All right, now for commodities market update, we have Dr. Adesola Sumoni, Financial Derivatives Company there, joining us to bring us up to speed on what's happening there. Great to have you. Good morning.
Good morning, Ladi. Thank you for having me on the show.
Great to have you. So again, the oil market still as volatile as ever, but we're seeing the prices are up this morning. But, looking at this market, it looks like the prices, just want to head downwards, regardless of, some bullish news we've gotten in a couple of months.
Thank you for that question, Ladi. At the moment, I think there are a host of factors driving oil prices at the moment. And like you mentioned, the oil market is currently volatile and is likely to be volatile in the near term. So on the demand side, we are seeing loosening of the COVID-19 restrictions in China. And I think this is positive. It's also kind of renewing hopes about a rebound in oil demand growth. So that is positive, because China is the largest buyer or is the largest importer of oil globally. But on the supply side, we're also seeing some factors. For instance, we heard about the Keystone export terminal, which supplies, I think, around 620,000 barrels of oil per day from Canada to United States. Apparently, last week, they discovered a spill or a leak in that oil pipeline. And by the time they discovered it, I think around 14,000 barrels of oil has already leaked, has been spilled. And this, is the kind of the largest oil spill that has happened in the United States in decades. So it's unknown how long it's going to take to clean up the leak and as well as repair the pipeline. So that's 620,000 barrels of oil is offline. In addition to that, we know that the EU is trying to place a price cap on Russia's oil, and Russia has come to say that anybody that tries to place a cap on their oil is not going to they're not going to sell to any country that tries to price their oil at the price cap. So we are seeing those potential disruptions coming from Russia, and going forward, I think, like you mentioned, Ladi, the oil market is going to be quite volatile. Trading is going to be quite volatile, driven by one, how the China's COVID-19 policy, how it evolves, how it unfolds. We've seen some people really fighting against the policy, even in China. Two would be the reaction to Russia, the reaction of Russia to this price cap on Russia's oil exports. And three would be the pace of monetary policy, the pace of hikes in monetary policy are coming out of the United States and Europe over the near to medium term.
And obviously, 2022, the earlier part of 2022 was great, for oil prices. But going into 2023, do you think it's still okay to take positions, at this time, hoping for more gains in 2023?
Lally, it's a gamble, right? It's very very risky. We don't know what's going to happen coming out of. Up until last week or 2 weeks ago, China was saying, we have this zero COVID policies. Now, once there's at least one case of COVID-19, they're going to shut down everything. But now we are seeing even Chinese people really fighting against it. We've seen a lot of protests even within China against this policy. So I think the government is beginning to shift position. We did not see that coming, for instance. Also, looking at this price cap, Russia has literally threatened that anybody who tries to price our oil at this EU price cap is not going to get any oil from us. And Russia, I don't think Russia is bluffing at this time, because Russia is such a big player in the global oil market. So if Russia reduces their export, the prices of oil is going to spike significantly.
All right. Well, what's happening with wheat and cocoa prices?
So for wheat, thank you for that question, lad. So for wheat, we are seeing the price of wheat also trend upwards. I think also this is coming from concerns of supply disruption out of the Black Sea. For those who don't know, the Black Sea is kind of an export region that borders Ukraine, Russia, and Turkey. So there was this agreement that, despite the fact that we are at war, Russia is going to allow Ukraine to export grain out of that port. I think it's a port in Odessa. But I think over the weekend there was some attacks, military attacks near near the export terminal, and that has kind of like shut down operations in the terminal. And that is why we are seeing our wheat prices trend upwards, because Ukraine is one of the largest exporters of wheat globally. But as at the end of yesterday, I think as operations exports have resumed, so I expect that the price of wheat would moderate in the coming days. In terms of cocoa, we know Nigeria, Ivory Coast, Ghana, they are the biggest exporters of cocoa. And now the Harmattan season has started. And usually the Harmattan season kind of dries out the cocoa pods and it affects the harvest. But what we are seeing is the prices are going down, which suggests that, at the start of this Harmattan season, it's not really cold. So the Harmattan is mild at the moment. So the soil is still moist enough and the main crop harvest is still going on as planned. So we're expecting big harvest coming out of Ivory Coast. However, at least from now up until mid-January. However, by mid-January, we think that Harmattan will have kicked off in full swing, and that may now affect the cocoa mid crop harvest going from April up until September. But for now, I think we're good.
Okay, well, we're good. I'll take that. But we got that data that Nigeria's trade balance plunged by 86% in the third quarter. What do you think drove this?
I think let me just give you a quick summary of what's going on really. So we have trade surplus, which is good, around 269 billion naira in trade surplus. This simply means that we exported more than we imported, which is good. But then when we look at, and on a quarter-on-quarter basis, Nigeria's total trade was down 9.66%, but on a year-on-year basis, it was up, because compared to last year, where COVID-19 was still in full sway, we also had all of these supply disruptions, so we are doing better relatively. But when we look at the when we look at the composition, what are we exporting, what are we importing, then you see where the problem lies. Let me blow your mind. Out of Nigeria's exports, 78.5% is PMS, is crude oil. Out of total exports, 78.5% is crude oil. 12.7% is natural gas, liquefied natural gas, and 2.2% is urea. So this is export. So when we talk about even Nigeria is a large cocoa exporter, cocoa exports as a share of the total exports is pretty much nothing. Is close to 0%. But if you look at the imports, we import significantly PMS, 21% of total imports. PMS, gas oil 5%, and wheat is 4%. So Nigeria is really what's the word? Really the price of wheat products in Nigeria is really elastic to the price in the global market. So when the prices of wheat in the global markets rises upwards, you can expect that wheat, flour, and all other wheat products in Nigeria are also going to trend upwards. So I think that's just what's going on in the trade market.
And obviously, we're trying to, switch, from an import-dependent country to an more export-dependent or a balanced economy, as it may seem. But we see the UK economy, we've got some good news. It rebounded more than expected in October. How are you seeing this?
Yeah, we're happy, but again, we are taking
and
that.
Obviously, is where you are.
Because while GDP growth came in positive for October, it came in at, I think, 0.5%. By the time you look at the 3 months to October, it was negative. Like that was what's the word now? September and August, including October, it was negative. So even though it was positive, we are not still. Even though the growth for October was positive, we are not out of the woods yet. And I mean, there are still all these big issues. Inflation is at 11%, which is a fresh 41-year high. We are seeing a cost of living crisis. The price of gas is at record levels, and we're having a cold snap in the UK at the moment. Everything is freezing over large at the moment. As I speak to you, the temperature is -2 degrees, and the warmest is going to be today is 1 degree Celsius. So we are seeing all of these factors. So I think, and the ONS, the Office of National Statistics, and even the Bank of England forecast that we are not out of the woods yet, that we are still going to experience recession, particularly if the GDP numbers for November and December coming negative, then we'll technically be in recession. In addition to that, Ladi, the cost of borrowing is also significantly high. The Bank of England has, significantly increased interest rates, I think by 575 basis points this year, and they're expected also to increase it further when they meet on Thursday. So all of these factors mean that, business confidence is down, consumer confidence is down, consumer spending is down, business spending is also down, and this is also going to push down economic growth going forward.
And obviously, all eyes on the US CPI data coming out later today. All right, Dr. Desola Simoni, thank you so much for giving us your perspective on the commodities market today. Thank you.
Thank you, Fab.
All right, we'll take a moment now.